The more immediate indicators improved this week. I'm Tony with Clarkson Santoro, and this is your real estate update for the week of Friday, July 17th. We know that buying or selling a property can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Starting off, we always like to look at how the market performed this past week. There are now 74 homes on the market, 5 fewer than last week, with an average asking price pretty much the same, $1,860,000, up a little bit from $1,828,000 last week. 6 homes went pending, 1 less than last week, but the average asking price of those pending sales jumped up significantly, up more than $150,000 on average, $1,791 this week compared to $1,633 last week. And 4 homes closed, 5 fewer than last week, but the average closing price is significantly higher, which is a good sign, $1,994,000 compared to the below 1.7 average we had last week for closing sales. Okay, so now we know how the market performed over this past week. Next, we like to look at the broader trends and indicators that help us determine where the market might be heading. But before we do that and look at those trends, if you find this information helpful, why don't you go ahead and hit the subscribe button down below so you can not miss out on future updates. And while you're down there, why not share this with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, starting with inventory, it continued to retreat from its high mark of 94 that we had a couple of weeks ago, reducing by 20 over the past couple of weeks. Here we are, we're way up there. Our inventory is now sitting at 74 homes, which is still relatively high for this time of year. See how low we were comparatively. Actually, it was starting to come down about the same time last year also. But 74 is a much more manageable number than what we had just a couple of weeks ago, when we were creeping up to that 100 mark. That would be a lot. With the reduction in inventory, our turnover rate has continued to improve, just slightly, still well below that 50% though. It's now at just under 40%, which is still a soft turnover rate, but the increase is refreshing. The over-under number has been an interesting metric to watch this year. With how slow the turnover rate has been, I would have expected this number to be comfortably below this 0 line all year. It was a lot last year. However, starting in December, we have been staying relatively high and in the over number for quite a bit of it. That being said, it has been in the under range for the past month or so. But again, not nearly as low in the under as the low turnover rate would suggest. I would expect it to be, closer to this range. Here we are just in the 1% below asking range. I know that's a lot of scribbling, more than I usually do. Anything in that plus or minus 1% range is really more like a break-even number than it is an over or under asking number. So again, the market home values remain healthy despite the market being slower. Now you might look at this number and say, wait a second, you just said the home values are remaining healthy. Why is this number dropping so significantly? The closing price on homes has continued to demonstrate that the lower prices are much easier to move than the higher priced homes. Anything at or below 1.8 tends to move quickly, especially if it is priced right and presents well. But even if a home in the 2 million range or higher does present well, they're still struggling to find buyers motivated to purchase. So again, even though our average closing price over the past month is just over 1.7, That doesn't mean home values have dropped significantly. It's just an indication that the higher priced homes are taking longer to sell and need a lot more work to get those buyers interested, or finding those buyers that have the ability. The Triple Q fund dropped about 1% this week, which has been a trend for the past month. Small little dips week to week, which hasn't really put a dent into the extreme growth the market has seen throughout the year. The fund is up 15% year to date, even with this past few weeks of regression that we have been seeing. And finally, the interest rates continue to do the same song and dance, hovering that back and forth, hovering right around that 6.5% range. It bounced back to 6.55 this week when it was at 6.49 last week. Nothing new from what we have been saying for the past year. It's stayed in that range pretty much for the past 2 years, really. So this week had some improving indicators along with some worsening indicators. The nice thing is that the biggest indicators for immediate market health are the ones that are improving this week. Inventory and turnover are always the ones I look at most closely when talking about the here and now market. So improvement there should be an encouragement for anyone needing to sell their home right now. The other broader indicators had a slightly more negative movement this week, but I honestly count that as a positive too. If we lived anywhere else in the country, I think the overall economy would be having a much greater negative impact on our market than we are experiencing here in San Ramon. So again, we live in this kind of protected bubble of healthy home values. So much so, there was even a news report this week that the Compass CEO pointed to the East Bay, specifically East Bay area here in California, as the market he would pay the closest attention to for growth and value. So it's been a tough couple of years, but we still maintain a healthy home value and market here in San Ramon. Thank you for joining me this week. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you stay informed on how the market is shaping up as we creep closer and closer to the end of summer. And if you want any help navigating the stressful or confusing process of selling or buying a home, reach out to us directly or leave a comment down below. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.